with a lot of home buyers who are out there, they're in the market. There must be a ton of questions that are coming up about financing, about different aspects of it, how to make it work best, how to get it to make sure they can buy the house that they want. Are you hearing a lot of that? Is that really getting into, I suppose, the decision-making process of buying a home?
Absolutely. It's actually paramount to making that decision. The first thing we have to do is find out, what they're approved for. So they've gone through those motions before we've gotten them in the car. Once they've actually hunted down the right homes and decided to make offers, we actually have to break down that property even more so to find out if it's even priced right. That becomes a conversation between, what the statistics tell us and what our loan officer can tell us. I'll give a property a range of where it should sell at to the peak of what it should sell at, and of course the X factor. Where is this market really going to push it to? And then we have to talk to our loan officer to find out, okay, if it does get pushed to this level, can we still qualify for that house? And then I also bring up the topic of whether or not that property is going to become an issue if it gets bid up past where it should appraise for. So that's where I'd like to ask Ryan, what, are you seeing this with some properties, down at the 11th hour where we've passed inspection that had multiple offers, the property got bid up, 10, 15% over asking price. And regardless of what our reservations were about the price getting pushed up, we think it should appraise. What happens if it doesn't? Have you seen that?
Well, let me answer the question first from a standpoint of what happens. From the financing perspective is, let's just say you have a contract of $550,000, but it only appraises at $500,000. So if somebody's going to put 20% down, they have to come in with 20% down of the $500,000 purchase price. Then they have to bring in $50,000 in cash to make up the difference. If the buyer still wants to buy the property, if the seller is unwilling to lower the price, that's kind of the only alternative they have.
Right.
Or we change the financing a little bit to be instead of 20%, you're 10%, and you're kind of making up the difference. But somehow you have to be creative with it. And the reality is it's going to start happening more and more just with the nature of the way these offers are going. So I think not only preparing the buyer accordingly, but I think us from the mortgage side and from the real estate perspective needs to give everybody more data to say, hey, this is what kind of percentage of reality could this be? Because a lot of sellers are asking for appraisal addendums now where they're basically saying, hey, we're waiving financing, so you have to buy this house even if you get turned down for a loan or forfeit your earnest money. And we're seeing that they know this appraisal issue is going to start coming up, that the buyer recognizes that it may not appraise and that you're going to have to bring cash in to get this thing closed.
It's interesting when I do see that appraisal addendum is mandatory to be crossed off the contract. I'm actually seeing the buyer pool diminish for that particular property. So that in turn is actually going to change how that property gets bid up. But hopefully that becomes a factor. But yeah, I think that's great that that's something people have to consider when trying to figure out a value for a property, as opposed to just throwing as much money as you can at it and hoping it appraises like we used to.
Yeah, and what I'm telling everybody now is really just for all of us to control what we can control about a transaction. So we can all look at comps and see if does the comps and the information of properties that have sold over the last 3 to 6 months justify the contract price. Okay. And most of the time, if it's pretty close or there's a logic behind the purchase price, the appraiser is going to make it work as long as they're not being inappropriate. And, because properties go up in value, you can say, hey, these ones are on the market. These similar homes sold within the vicinity. The value makes sense. But where I've seen the issue comes up is when you make an offer for a property for $550 and literally the house next door sold 2 weeks ago for $500,000 and it's the same house. How can they not call that out and say, hey, this isn't worth $550?
Right.
So I think it's for all of us to take a deeper look and really get a perspective of, hey, it should be okay. Logic says it from this data.
Yeah, most appraisers, all appraisers use sold comps to justify the price for the property, correct? Are they actually taking into account pending properties or pending inspection properties to extrapolate a trend on where the property's values are going? And can they use that?
They can. And what we tend to find is you're going to get 3 to 4 properties that have actually sold on the report. You tend to have 2 that are pending.
Right.
That's kind of that's the kind of data they want to see. And you can't always get that, but that's what they're shooting for. 3 to 4 sold, a couple pending, so you're going to make a good perspective on both.
Okay.
Or even just listed.
But sometimes even those pending ones, they don't know what it actually sold for.
Right.
So it could be pending at a $550 purchase price or listing price, sold for $625, and that data isn't available to them.
True.
Or they can say, hey, yours is under contract for $550. This one, 2 houses down, has been on. It's a better house. It's been on the market for 35 days at $535.
Or 119 days.
Yeah. I mean, so they have to look at that, and they have to do some research, and they have to put that a part of the report.
And then they guess. But it's all. I mean, that's what's interesting about appraisals is they end up. It's just called bracketing. And so they take a low one and a high one, and then they basically take some factors and put it in the middle somewhere.
Sure.
And so I think it's difficult for people to understand why appraisals could come back 5 or 10% different if you have 2 appraisals done. It's pretty interesting.
And like anything else, everything comes down to quality of work too. If you get good quality professionals doing the work, you're going to get a good, accurate, well represented report, as opposed to maybe some appraiser who doesn't know the market, who doesn't get a lot of business, who doesn't have a lot of experience, and is maybe working off a fear of giving a bad report, and they're going to take a conservative route, and that's what you're going to get delivered. And that's, or we talk about big banks a lot, but the big banks use cheaper people to do the work who don't have a lot of experience in a specific area, and that's the kind of work you tend to get.
Well, and walking through the property will give that appraiser obviously the better perspective on the kind of finishes that actually went into that home. Do you see any drive-by appraisals anymore?
Sometimes. Yeah, sometimes. Okay. Not really very much on purchases, more on refis, because if you have a lot of equity in the property, and they can look online and get a really good feel on value. So that even if it's just a range, they don't care too much.
Okay.
As long as so drive-by is just going to tell them, hey, the property's there, it's not in bad condition, at least from the outside looking in. So yeah, that happens from time to time.
Does that tend to be one of the biggest question marks people have is on the appraisal, simply because it can throw everything out of whack?
It can. What's really important for that appraiser to see is, what actually went into that house to bring that value up. Mm-hmm. Was it just the market pushing the value, or was it because there was gold-plated toilets in the bathroom and granite countertops on every surface, and they literally redid everything versus the next door neighbor that's been sitting there on the market for X amount of days, 35 or 119 days, it's not selling because they haven't done anything to that property yet. So the appraiser has to know the difference. The agents have to know the difference.
And it seems like anything within our business specifically, you have different phases of things that tend to be an issue. You had over the last couple of years a slow market. It was a buyer's market, not a lot of activity and tight guidelines. That was the issue we all dealt with in this market. Then you kind of now you're dealing with this fast, low inventory, high demand market where the sellers are dictating a lot of the rules and conditions. And because of this appreciation that's happening in a relatively fast manner that's catching up to the last 4 or 5 years, appraisals tend to be an issue right now. Then we're going to get kind of past this. Things will slow down when rates start going up a little bit. Now the next issue will be, hey, I got pre-approved when my rate was at 4.5. The market's shifting. Am I still approved at 5% as an interest rate? And we're just kind of always going to have these shifts in the market that are different challenges we got to deal with. And just right now it tends to be the extreme leverage that sellers have, okay, if they have a good house, and because of that, appraisals are going to be an issue, and then all the addendums that are going to be asked for, because quite frankly the sellers do have that leverage.
Yeah, the appraisers also don't have much of a voice, which is anymore, because of the way that the laws have been written, where there's really no contact between the lender or the appraiser, and so it's almost put a very strange communication divide between people who are trying to all work on the same thing, but it's so formal now, and it's formal requests to get an appraisal. I just ask simple questions, and I think that it can feel as if it's just like moving through molasses trying to get any of these questions addressed by the actual person who's doing the work.
Yeah,
that's true. I think the appraisers do go one extra step to actually put some humanity to that paperwork and talk to the agents, find out what really happened, with regards to the transaction before it actually was mutually accepted. And then, of course, tell me something I can't see if I walk to the house. Did they pull all the new wire? Did they change out all the plumbing?
The plumbing is gold. Trust me.
It is, yeah. They can turn the faucet on and see if there's rust coming out and know that there's galvanized plumbing there. But they'll go through those lengths to make sure they're not missing something.
Yeah.
At the end of the day, Buyers who are active in this market who want to buy still really, and we say it every week, they have to take a really active role in going through the pre-approval process, getting their ducks in a row, getting all documents to their lender, having a really great relationship with their lender. And the best case scenario is there's a great relationship between buyer, lender, and agent where everybody's working together for the same common purpose, is to help that person buy the home that they want. And we're seeing that the old school ways of doing things, and I've been talking about again for the last 6 months, do a cover letter and make the conversation to have the lender call the listing agent and explain the relationship between lender and buyer. Okay,
that would give you a significant edge, actually. I mean, these listing agents will certainly hear from the buyer's agent, but a phone call from a lender would actually really comfort that seller to say, okay, not only are they pre-approved, they are ready, willing, and able to get a loan to buy my house. So I'm not going to be concerned about, things happening on the finance side or bad things happening on the finance side, come 21 days into the contract.
And I think really that is a big part of what's going on right now. And we've had a ton of success working with our partners now that we make that call every single time an offer goes in. And we're getting the offers accepted more often than not. And in some cases, offers are getting accepted where the offer is actually less than other competing offers, because that confidence that an agent wants to have and a seller wants to have, knowing that if we agree to this deal out of this, the stack of 20, that has the highest and best chance of closing, makes everybody feel a lot much better as opposed to maybe $5,000 or $10,000 in some cases. But that's from my perspective, that's what the agents are looking for, the sellers are looking for, is to have that confidence going, wow, this is the only lender that called to explain the seller, it's more than a piece of paper and a pre-approval letter. They're local, they're a reputable company, they're here, they're going to walk this through the process, and they have a vested interest in doing a great job and having a great experience for everybody. And it seems like that's pulling a lot of, that's the things you have to do to be creative these days to help our buyers, I think.
I think that's a really good point. Closing on time is obviously paramount to the sellers, so they can plan their lives, right? Mm-hmm. They know there's no risk or less risk of closing late and having to make another payment on that mortgage because they're still in the house.
Yeah,
that's big.
Yeah. And I'm seeing, which is a good thing, I'm seeing that buyers more and more are starting to recognize the value of local reputable lenders and really go for service and experience first as a bigger priority today in a really competitive market, as opposed to just going rate, just going online and finding the best possible deal, because they're starting to hear more and more of the horror stories of finally getting somebody under contract in a competitive market and the loan not closing. So that's a good thing.
That causes probably the most stress on every party in the transaction.
I mean, when you're in these transactions too, and you see it's a lender that is, Omaha, Nebraska Bank or whatever it may be, what do you think? When you're in these competitive type of situations?
That's a really, really, really good point, actually. I've worked with some transactions where the loan officer is definitely out of state. They don't have a feel for what's happening here. We're in a market that's just a little bit different than everybody else's right now. So local knowledge is big. The banks here, the loan officers here understand what type of property or what type of value is in these properties. So that understanding just comforts them into knowing that property is good collateral for that loan. The out-of-state banks they have way too many questions that aren't even relevant in our market. So I think because they're asking those types of questions, it just slows the process down. So we shouldn't have to educate our loan officers on what to look for in these properties. When we're working with a local loan officer, they just know what to ask for right off the bat, and we can just move very, very quickly through the process because everything happens so fast. From putting the house on the market and it's sold in 3 days, the buyer is expected to close in 30 days. And when things happen that quickly, and all of a sudden you hit the brakes and push the contract out another extension for 7 days or 10 days, everyone gets really, really
real antsy.